All right. Good morning, everybody. Happy Thursday. I'm not a happy Thursday, but yeah, I don't know. I don't know, frankly. Today was probably a day that, not probably, definitely a day that we were all hoping would never happen, and yet here we are. So things have developed. You all know that by now. Over in Ukraine, that is on our minds this morning. There are days where we are all about trying to make money in the stock market and trying to give you trades, and then there are days where we're not, and this is more towards the latter. Where we will talk about the markets today, but it is certainly not top of mind for us right now. Um, that being said, we are here with you for you, and yeah, we're gonna go ahead with the show. Shout out to everyone that is tuning in from or who has been in a conflict area. Dino in the chat, Matt Hammond, who joined us for our weekly IPO segment, have both escaped Ukraine. I hope everyone stays safe. Seriously, not a fun morning. But we're here with you. So let's go. It's time for pre-market prep. Let's roll that intro.
Coming to you live from downtown Detroit, this is Benzinga's pre-market prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's bring on Joel and Dennis here. Good morning, guys. And also, I just want to say for the chat, we did put the chat on subscriber-only mode today, which means you just have to be a subscriber to our YouTube channel to participate. We are not really in the mood for any crap in the chat this morning, so if we see anything, we're just going to be dropping the ban hammer on you. Anything that pisses us off, frankly. So you've been warned. But good morning, guys. I will admit am a little bit taken aback at the price action overnight. Apparently, the market is also surprised by the fact that things have escalated here overnight.
I mean, we just got to put it in perspective here, and I think we should just start with that I cannot even believe the videos that I'm seeing coming. I had no idea they were going to start dropping bombs everywhere.
Yep.
I'm in shock by that. Like you say, invasion, what does that mean? What does that really mean? Okay, well, we're going to move in, we're going to do some. I did not anticipate like the first day and they're just going to start bombing everything. I mean, I'm absolutely taken back. I feel so sorry for anybody who's got family, the people of Ukraine. I mean, we're a stock show. We're going to talk stocks here today, but like, I'm really, really, just saddened about the whole thing. Like, you watch those videos and it really gives you perspective, and you can say, oh my goodness, well, I'm losing a lot of money today. I mean, it's not even about that. It's, there's so much more important things in life. And these people, in Ukraine are, getting their lives basically taken away from them. So I don't even know what to say. I've never, I don't know. I don't think I've, seen this. So I don't even know what to say.
Yeah, I'll just, there's times when, we talk about technical analysis, and then there's times when we talk about fundamental analysis. But we're at a point where really neither of those matter as far as, what's going on in the markets. There's no script for this.
There's no.
I'll just give you, the net change, because that's really all that matters here. And the S&Ps are down 104 handles at 41.18. That's 2.45%. Crude did get over 100. That's up 729 and 99.39. We have gold. Well, gold is acting as a safe haven that it's supposed to act as. Yep, yeah. It's up 54.90 at 1965.20. Silver, that's in the green too. That's up 77 cents at 25.38. Not good for Bitcoin here. If you were looking at that as a safe haven, that's down nearly $2,500 at 35,100. And Ethereum, that's down over 10%. It's 2350, and we could just go into the rest of the stocks. I don't know if we're not going to talk technically, and we're not going to
Well,
talk
we can. We can
fundamentally.
talk technically, and we're going to
Sure.
talk stocks here, and we might as well get into it. I mean, this is what the show is about. I got it dead wrong yesterday. I did not anticipate, face what everything that's transpired here in the last 24 hours. I thought, maybe we'll start nibbling in some stocks. Maybe I liked the response to the futures yesterday. They were holding up strong, considering that, it sounded like invasion was imminent. But this was not the the case. Obviously, it got worse, and the negative headlines from Ukraine just kept coming all day, and the market just kept obviously getting hammered on it. We've taken out all support here. They've come for the big guns now as well. I mean,
Hmm.
Apple's were holding up well 3 days ago. Microsoft's were holding up fairly well. They've come for those soldiers as well. So they're selling everything. I mean, and then you can come to Tesla. I mean, Tesla. Maybe we should start with that one because it has been absolutely hammered in the last 7 weeks. $1,200 now, $700. Talking about over a 40% fall in basically just January and February. So there is a lot of carnage here happening now, and some of the big guns as well. I don't know, as a long-term investor, do you start nibbling on some stocks here? I think you do your homework. I think if you're sitting a lot of cash, I still think you do. I think you start nibbling. I think I will put some of my cash to work here, but
I,
you've got to keep dry powder because if you're all in right now, it's real ugly. So the more cash you have, the more money you're saving right now to invest at a later time. And is this thing going to end tomorrow? Is this going to end? I mean, are the negative headlines, is this as bad as it's going to get? I'm scared it's not. So that's why it's hard to just come in here and go all in again. Can you nibble here if you got some companies you
I
like?
just,
I think you can, but be prepared. You're probably going to lose some money, at least in the short term.
I mean, on paper, they always say the market is forward looking. Clearly, did not see this coming. If it had,
No, I didn't
it
see it
wouldn't it
coming.
wouldn't be reacting to the way it was this morning. I mean,
Yeah,
every single global market is down, with the exception of, well, is Brazil even open yet? Looks like Brazil.
everything's down.
Everything's down. Every
Everything's down.
every global market, every global index, every major, it's all down.
Yeah,
As Joel said, right, oil and crude and gold are higher, right, and that's basically what you've got here this morning. So if the market didn't see this coming, what else hasn't it seen coming? I feel like I'm in we're in no position to come in and start buying anything. And I know the commodities are higher. Let's acknowledge that.
yeah. Oh,
Commodities
for sure. And gold.
across the board are higher. It's not even just gold and oil.
Yeah,
It's every commodity under the sun right now is trading higher. You can look at, the grains, the softs, the metals, whatever. They're all higher. But I don't know how you come in today and just buy anything, frankly.
it depends on your positioning. I
Guess.
mean, if you have a lot of cash, you can. I think you can. I think I'm going to put a little bit of cash to work today. But am I going all in? No. Again, I think the negative headlines bring us probably lower yet. We've taken out all support. So it all depends. As a trader, no, I'm not taking any longs.
Yeah.
I tried a couple yesterday, stopped out immediately. As a long-term investor, everything that I've bought in 2022, I'm down in, except
Mhm.
Wynn Resorts. I think that's the only one. But I bought like 4 or 5 stocks. I was at 42% cash. I think when we started the year, I brought it down to 35% cash. That's 7% that I put to work. I'm down in all that stuff. I bought some emerging markets funds down. Bought some Square. I got up quickly in it. Now I'm hammered in it. So I can't remember. There's about 3 or 4 other stocks. I know I bought Win, and that one was a good one. Virtue Financial, I bought that was a good one too. But I mean, it's tough. The tape is bad. I mean, it's an ugly tape. If you're a long only trader, you're really going to struggle in this environment. As looking at it from from a market's perspective here, I mean, there's opportunities. I mean, there's going to be some stocks that are getting killed, today, and maybe they shouldn't be getting killed, and maybe we got to try to explore those stocks. Do I want to jump in oil stocks now, though? Do I want to jump in gold stocks? I think you're chasing it at this point. I don't know. Like maybe oil's going to go to 150. Maybe all these oil stocks are just going to continue to explode. But I don't know, like, you don't know the next headline. You don't know the news flow where it's going. We don't know.
It's hard to separate your emotions because on the one hand, I'm feeling very down today, mostly not about the markets at all, but I'm just feeling down about the events and what's happening in Ukraine.
Yeah, for sure.
And I'm trying not to let that color my core belief that in the long term, the markets survive and they go higher. I'm not trying to be overly dramatic and overly panicky and telling everyone to sell everything because I still believe that.
I think if you're selling today, you're doing it wrong.
Markets go higher, stocks go higher. It survived every event that's been thrown at it in the history of mankind, or at least since the Great Depression, more or less. We've got a Fed that is less accommodative, but still accommodative in the grand scheme of things. Markets go higher, stocks go higher. I still believe in investing, and I believe that this too shall pass. But it's hard to separate that from my just general mood this morning, which is super down.
Well, let's put that in perspective
Yeah.
too, Spencer. I mean, if you believe that markets in the long run do go higher, and in the case of Japan, it is not the case. Sorry to say, but we never got back to the 1993 highs. So it's not necessarily true that all markets will continue to go up forever. But if you think, the U.S. markets, and if you're Canadian markets, U.S. market, North American markets, if you think, eventually markets track higher, why would you not be buying today? Why would you, if you're a long-term investor, why would you not, if you're 35% cash like me, would you put 2% to work today? Maybe.
Yes, I should specify. Not everything always comes back. We all know this, right?
Well, that's the scary thing is people don't realize they think one stock doesn't come back. This is Japan. The Nikkei topped out, I believe, in 1993 or 1995, and we were still over 50% off those highs. So these speculative bubbles sometimes don't come back very quickly. So don't just say, okay, everything's going to come back. But I'm on board with you, Spencer. I'm a long-term believer that 25 years from now, markets are going to be higher. Should we be looking? What stocks should we be looking at today that maybe it's just gotten ridiculously overdone? I mean, you can. I was saying the Kathy names have been ridiculously overdone.
I want to correct the record. The Nikkei did make it back last year.
To the highs?
Yeah.
I don't think so. It was 40. It's like 40,000. Let's just see. I think that is wrong, Spencer. And maybe the chat.
I mean, I'm looking at the Nikkei 225
all-time high,
and the high from 91, and it made it back there last year.
It did finally make it back.
Yeah,
you may be right, but
it took 30 years. But
no, the highest the Nikkei has ever been is 38,957 in December 29th of 1989.
All right, then I'm looking at different.
Today we are 25,000. So I believe
my chart doesn't even go back that far. So
yeah, 1989.
Fine.
That's insane to think about, though. Like if you were investing in 1989 in Japanese stocks, you are 30 years later, and you are still down money. So in some cases, things don't always come back. But in our cases, we're going to go on this. We're not going to say we're not coming back. I'm going to go on your train. I'm going to say, yes, eventually we're going to make new all-time highs. Is it going to be this year? Probably not. Is it going to be next year? Probably not. But I think eventually here, we are going to make new all-time highs. So I'm sitting with some cash. Maybe I do put a little bit to work today. Mr. Elconin, what are your thoughts?
I think it's impossible to say that the market is going to make in any kind of time frame. 5, 10 years, 25 years.
I think we will,
years. But based on the evidence and the circumstances that we have right now, I think it's absolutely impossible to say that.
Well, we don't know anything for certain, but I'm going to make a bet that markets will again make new all-time highs at a certain point in time. And by that bet is I stay invested. If I thought we weren't coming back, I'd sell all my stocks, move 100% cash, and buy a bunker, and that's it, I guess. But I think we eventually are going to go back to new all-time highs. That's why I stay long-term invested.
Yes.
I have a lot of cash. This is a significant amount of cash at 35%. For my age, 45 years old, if I went to a money manager and they said you were sitting in 35% cash, like, what are you doing?
Yes.
So should I put some of that cash to work today? Maybe I should just buy, an index. Maybe you should go and look at some of these world markets that are really getting hammered. I mean, Germany's down 5% today.
Yeah.
Maybe you should look at a stock like Deutsche Bank. I mean, DB, let's give you a stock. $12 major support for this thing. we're in a rising interest rate environment, which was going to be good for this. Up till 2 weeks ago, this stock was just a monster.
Are they going to raise
to
rates now,
16.70.
Dennis? I
Well,
mean, is that a
They're
slam dunk
going to
now?
raise a quarter. That's another
well,
conversation too. I think they're going the quarter, but I think half is
I
gone.
do want
I
to
don't think
point
they're
out.
raising a half.
I do want to point out that I'm looking at that CME Fed Watch tool, and the market is reacting to these events in real time here. The odds of a quarter point rate hike at the March meeting yesterday were like 99.9%. This morning, 86%.
Not even 100% to go.
Not even 100% to go. Quarter
That's
point.
good for a lot of stocks. I mean, I said it yesterday, obviously a day early, but it's still good for a number of stocks. I mean,
and
now the nine and Muhammad Al-Arian was on CNBC this morning, and I tell you one thing: we've had Muhammad on the show too.
Oh yeah,
there's a lot of talking heads out there.
he knows.
Muhammad knows his stuff better than almost anyone. He's very smart. He's very informed, and the stuff he was talking about is scary this morning. But he said this morning 8 or 9 rate hikes is completely off the table. Where JP Morgan was talking 8 or 9, he's like, that's not even in the realm of possibility, is what he said on CNBC this morning. And I completely agree. I think you're going to get, we said all along, I think you get 3 or 4. They're not going to get a ton of rate hikes. The geopolitical risks are significant. He's talking about stagflation, though, and that's a big word, too.
It's not just him. Bank of America also is pulling out with a note on stag. I mean, yeah, they're dropping the S word, which is extra scary.
Yes.
Right?
Yeah.
Extra scary. Prices going up and the economy
inflation high in a contracting economy.
Yeah. Extra scary.
That sounds horrible. I don't think we've ever had that.
Yeah, Vegas, the stag word is flying.
Have we ever had that in the US? Like maybe we got to go back a lot of years. I don't have experience with stagflation. I know they've talked about it. I don't know.
Did we have it? Did we have it in the 70s?
I don't know.
I don't know either.
Yeah. So the big thing here is the unemployment, right? Unemployment isn't getting bad. That's the focus here for stagflation. Other than that, you can watch to see if you see that unemployment numbers start getting bigger. That would get us into the stagflation.
I think we did have it in the mid to late 70s. There was in the U.S. There was stagflation. So,
and you had a 12-year spell in 1968. The Dow Jones, I believe, hit 1,000, and then it never hit it again until 1980. There was a 12-year period where U.S. stock markets, it took 12 years to make a new high. Are we going into that kind of a period? No, but I think we're going into a multi-year period because we've seen this. You know, we saw it with the NASDAQ where it took 12 years from the tech bubble to burst to come back to new highs. I think you got to be cautious, and I think if you're all in this market, you've got to use rallies to sell. So I guess it's all about your individual positioning. You're sitting with a lot of cash, maybe using dips to buy. You're sitting with a lot of stocks. You've got to use the rips to sell. And if you're on margin right now, I don't know what you're doing.
I think, well, we've talked about this a lot too. And where are you at in your investing horizon?
That too.
And I know we have people of all different ages. I think we probably have a younger male demographic here, but who knows? I'm sure we don't want to offend anybody, but I think if you've been at the market for a long time and investing in different things, I don't think that, in your near retirement or a big investment, I don't think you look at the buy button at all, in this kind of situation. And also, if you look at just things on a longer term perspective, yeah, we pulled back. I mean, look at this S&P monthly chart. I mean, that is, the move that we've had off the COVID lows.
It's unbelievable.
I mean,
it's unbelievable.
Yeah, that's just and I doubted it at,
that's
3,500.
Perspective, man.
And I doubted it at 4,000, and I doubted it at 4,500.
Holy.
Yeah.
That just gives you perspective that this may just be getting started for the big caps, the mega caps. We've had a massive, and if you bring up obviously a lot of smaller companies, you bring up a lot of storied stocks, the charts look much different. But we know this market has been held up by the major soldiers like the Apples and the Amazons and the Microsofts and the Googles for a very long time, and they are starting to crack. If they decide to come for those soldiers, that 3,500 number you're talking about, Joel, is not off the table. So I think I am, and there's people that are going to say it. I heard, CNBC commentators saying it just a little bit ago. I don't think I'm coming in and buying Apple here today. I already own Apple. I don't think I'm buying. I think if I'm buying anything, I'm doing evaluation. I'm looking, and maybe some beaten down names, baby with the bathwater type thing. Maybe just indexing because it's just tough to just call a specific stock right now. But I like the Deutsche Bank. I think I'm buying banks on weakness here because I do think interest rates are still trickling higher. Banks are making basically new lows on the move. It's incredible. But Bank of America just
well,
went
it's
from a
not just
52-week high.
it's all the European banks, Dennis. It's Credit Suisse, it's Deutsche Bank, it beat Barclays had earnings.
It's our banks too.
Well, yeah, it's everything.
I mean, it's the U.S. banks as well. I mean, they've come down. I mean, they're fairly cheap. They've been cheap. They've been cheap for a long time. The U.S. banks. That's where I'm looking at a little bit of exposure is some of the financials. But again, to Joel's point is that chart scares me, and maybe I don't want to add any exposure. Maybe I just want to stay 35% cash. I really don't know. I don't know long term. I think this market's very difficult to call. I think you can trade it. I think, there's going to be some rips to sell. You're going to use those opportunities to short stocks or to potentially get out of some positions. I think you're going to have some more, obviously, bad headlines coming out. There's going to be continued dips. Do I think we're crashing here? I don't think we're in a crash mode. I think there will be, some buyers to come in here eventually, but FOMO is not apparent right now in my Twitter feed. And it's not apparent, and that's kind of scary because it's been this buy the dip mentality that makes us keep coming back. We've kind of broke that. Buy the dip mentality, and that's why you can get these follow-throughs and the bounces aren't as like they used to be.
You know what, Dennis? I want to give you credit because you talked me into Palantir yesterday. Thank you very much for that. Although
again,
I'm going to get stopped out this morning. So
this was the day, though. This was the day you're supposed to be buying Palantir now that she's done selling. She finished up last night.
All right.
So it's supposed to be after the close today. So 960.
I didn't account for a war, Dennis.
I don't own Palantir at all. And I think if you got anything on for a trade, you got to stop yourself out. I have no swing longs on. I had a couple on yesterday, stopped out on both of them. I tried a firm, stopped out on that because it held up well for a couple of days around the 36. I thought it was maybe going to hold, and then it cracked and broke. I mean, as a trader, it's all about protecting your capital. It's about little losers. So even though I'm wrong on a lot of calls yesterday, and I'm losing money in my long-term portfolio, but in the short-term trading account, I take my 2% losers, and I had a firm, I had ARC. I took those losses. As soon as they start making new lows, you got to get out. As soon as they start breaking down to new lows, you got to say, okay, I'm wrong. Try again. And that's what it is, all about protecting capital as a trader.
I do want to, at some point, maybe we could do it now, move on to earnings. We're going to have JC Parets on in 12 or so minutes.
Goodness.
And
JC will be pumped.
And Peter Tuchman at 9. A fun game I was playing last night with the earnings reports is I was going through the calendar, looking at every stock to report, not even looking at the numbers and saying, hey, I bet you this one is down. Oh, it is. I bet you this one's down. Oh, it is.
Yeah.
Because every stock that reported earnings last night was down.
Yeah.
There was one I found that wasn't, and that was Clover Health, and that's now come back down to where it was. So those games.
Clover Health. Oh my.
But every single, I want to start with eBay and BABA because those are the big ones overnight here.
Sure.
eBay again. I don't even. It doesn't even matter.
Do the numbers even matter?
They are meaningless.
Yeah, if you're just randomly shorting stocks into the reports or shorting stocks after the report on the pops,
I'm not even going to give you the numbers because the numbers don't matter.
Yeah.
The stock is going to trade down regardless.
Yeah.
So and look at Alibaba. Alibaba was up. How high was BABA this morning? How high did BABA get? Someone said it.
Somebody bought BABA on those numbers?
Yeah. Oh yeah.
They were horrible, weren't they?
We can't be buying. In my opinion, you can't be buying any stocks on an earnings beat. Look at Upstart. Before we get these, look at Upstart. Great report. Goes out, rallies 50%, basically 50% from 109 up to $157. Call it 45%.
All the way back.
3 days later, it gives it all back. That's the kind of market. That was a great report. Doesn't matter. We care zero. They just sell stocks.
It's just not that. I mean, it's,
that's unbelievable, though, that a stock will rally 40 or 50% on a report and 3 days later gives it all back. It's never, that's the one thing working against the bearish thesis is it's never been easier for the shorts. It's never been easier. You're shorting a rip and then they just instantly make money. It doesn't even matter what it is. And I don't know, it's never been that easy on the short side. So I got to think eventually they're going to make it tougher on the short side, which makes me think we will have some wicked short
Who's
squeezes
they?
here.
I don't
Who's
know.
The
they?
market is they.
Someone,
The market. The market is they.
somebody's coming in here and buying. I don't know who, but there's always a buyer out there. I just don't know where they are.
There's always a buyer for every seller. But what I'm saying is it's been very difficult. If you're buying these rips, like Google announced everything, did everything right, gives it all back, making new lows on the move. And 3 weeks later, it seems like the stocks that disappoint go down and keep going down. The stocks that beat go up, but then 3 days later they go back down. So either way, the shorts are winning on all those, which is insane. I've never seen a market that, like to selling the pops, selling the rips. Selling the rips in 2022 has worked the best I've ever seen in my 22-year trading career. It's worked better than anything. I can't believe that, every single stock that bounces even immediately gets sold. Even at the tune of Home Depot, which was a great report, it was up $15 on that. They couldn't even hold it for 10 minutes.
Something about margins on that.
That's all garbage, Joel, when they talk about it. That's all that is media. All that is media justifying the price after the fact. And they will look through the report and try to find anything they can. Why is Home Depot down? Find me a fundamental reason. Because you know what? I get reporters calling me. They don't want to hear anything technical. They don't want to hear that everybody's selling everything. They want a fundamental reason that they can print. So all that is, and Kramer does it all the time too. They'll find the fundamental reason to try to justify bad price action when it's just bad price action. I'm sure JC is, and it's be an interesting conversation to have with him too. But sometimes it's just bad price action, and the company really didn't do anything bad. Mm-hmm. I mean, take Papa John's here today. They'll find a reason that Papa John's is down 10%. But in all likelihood, it's just bad price action. It's bad price action. It was down into the report. It doesn't even matter. We're just selling everything. It's a bad day for anything to reporting earnings. But I'll tell you, the media will try to justify every move with a fundamental reason when sometimes it's just bad price action.
I mean, yeah, the numbers don't matter. You can look at Papa John's, the numbers this morning were pretty good. Who cares?
Doesn't matter.
Yeah.
Doesn't even matter.
Yeah.
They hammered this thing down to $81. That was an overshoot. That's to the point of ridiculousness. It's 94 now. They literally hit this down to $81. There's a trade. It was only 400 or 500 shares.
Right? Not much.
81.09.
Jeez, man.
They hit it down to 81.09. Papa John, let's hit it down $25. It's pizza. Okay, so there is opportunities, on the dips. That was just ridiculous. Is it coming back all the way? Well, no, nothing seems to. But 95 feels a lot better than 81. I don't even know what to say though. Like
we will echo the sentiment. I think we said this. Yeah, we've been saying this for a couple weeks now, or I feel like I have. If you're going to buy anything now, you got to be prepared for the fact that you're going to lose money in the short term.
Probably
you're going to lose money in the coming days, weeks, maybe even months. You will, if you buy now, you will lose money. That's just and the exceptions to that are like the defense stocks, right? We know Lockheed Martin's up today. We know Raytheon, L3 Harris, all those guys. The staples have been holding up relatively well compared to the rest of the market, but even they're down today. And then commodities, which we've talked about, but you got to be prepared if you're going to buy anything. You got to know what you're in for. You're in for a tough go of it in the next few days, weeks, months.
And do I want to chase all those things? I mean, there's FOMO. So I shouldn't say FOMO. FOMO is there in the commodities now. There is FOMO and there's chasing going on the same herd that's like, oh my goodness, I got to go get into this. I mean, when the FOMO ends, that stuff comes back in too. The problem is with those, is that, Chevron, that they don't trade at crazy valuations. Lockheed Martin, which is stock I had in my portfolio for a long time, it's still got 2.81% dividend. Now, you're talking about war and stuff. So obviously these stocks are going to go higher. So understanding those relationships help you to make money in the short term. But long term, I don't know if you're coming and investing in some of these things at these prices. But it's been working short term.
Yeah.
I mean, it looks like
tricky market.
Wheat's limit up, it looks like. And wheat's limit up. And I think corn's limit up.
Those limits are tight though too, Joel. So it's not they do. I mean, those limits are tight. I think we've had Rocky Horner on here talking about that before, haven't we? Wasn't she the one that? Am I getting it wrong?
Yeah.
Maybe it wasn't Rocky.
I can't remember what you said about the limits specifically.
They're tight.
Okay.
Like, I mean, lumber futures hit limit like when they were hitting limit every day there for a while. So I mean, some of those futures limit up, limit down are tight. I mean, S&P futures. What is the limit down, Joel, here on S&P futures?
7%.
It's 7, and that's intraday as well.
Yeah.
Yeah. When did they widen them so much?
The higher we go.
Yeah, but it wasn't 7% before. Was it 7%?
Yes, it was during COVID. It was 7%.
I think was it 5? Well, I
thought
thought
it
it
was
was
5.
5 for some reason.
I feel like
Maybe
they
because
widened it.
yeah.
Well, there's different limits for the futures and for the
Yes.
stocks.
Yeah, because remember, there is. Oh, yeah, because you have the circuit breakers. I mean, the stocks are way different, but the futures, I guess, that's what we were saying. The futures are trading efficiently. And then they'd open at 9:30 and they'd halt all the stocks 5 minutes because of the stupid limit down things, which was ridiculous. So yeah, Anthony verifies it is 7%. So futures are 7%. The stocks, individual stocks, are different. We know it depends. It's 3%, 5%, 10%. The circuit breakers are all different there. So in a lot of cases, it's 10% on some individual stocks. On the indices, on the SPY, I can't remember what they are. Is it 5? I can't remember.
No, it's that there's more. That's a great point. Thank you from the chat. There's more than one circuit breaker. The first one is 7. The second one is 5. That's what you're thinking of. Thank you, Anthony.
Okay.
Oh, is that where we're getting the 5 from? So it's 7. That's Anthony. Great job. So it's 7. The first one's 7. The next one's 5. Gotcha.
Yeah. Yes.
After that.
So, yeah. It's been 2 years since we've had to deal with that.
When COVID, we were hitting the 7%. We'd open and then boom, the futures closed 7%. So SPY that was trading efficiently. I'm getting it backwards. SPY was trading efficiently after hours, and then because there's no circuit breakers after hours on individual stocks. There is when you start the regular session.
It was every day for like a week in March of 2020, where we were opening and just limit down. Right off.
Yeah. Halting for the first
core
5
CPI
minutes.
out, Dennis. I really don't think people really care.
Did it happen? 5%?
Yeah.
I mean, jobless claims are out. Core CPI is out. I don't know.
Nothing's mattering.
Yeah,
now.
once
now
again,
all that matters is Ukraine has trumped all now.
Yeah, Ukraine.
It's amazing how the news flow changes and what's important in the market,
I know.
and understanding that. And you called this. You and Mitch called this early, that this Ukraine situation, the market was, eventually going to be worried about this, and we challenged it for a bit. But I tell you, right now, this Ukraine situation is, all the market cares about at this point in time.
I'm getting I saw an interesting stat, and if you look at the return over the market over the last decade, over the last 10, 12 years, we've had pretty unbelievable returns, right? On a yearly basis.
Too much.
Sure.
Too much.
Yeah. So 15, 16%. So if we had a 0% return for 10 decades, then that would bring us back more down to the historical norm of 8 or 9%. So that
would be dramatic.
Ryan, that's courtesy of my one of my friends. I didn't make that up, and I'm not that smart. But
Ryan Dietrich tweeted a chart this morning of the S&P 500 returns after major geopolitical events, when those events occur near a recession and not near a recession.
What's Ryan saying?
The bottom line is, and this is what his chart says, is if you have a major geopolitical event, such as the one we're in right now, and it occurs near a recession, then 12 months later, the markets are lower. But if it doesn't occur near a recession...
no, come on. I mean, what was that show where...
if it doesn't occur near a recession,
then
12 months later, the markets are higher.
What was that show? It wasn't obviously the $64,000 question. There was another one where you make a million. What was it? And they asked all these questions, and you could call somebody, and you had a lifeline.
Oh, come on! Who wants to be a millionaire?
Who wants to be a millionaire? Right now, my lifeline would be I'd call Ryan Dietrich. That's what would be the
Ryan's
first person.
Going to say that exactly
I want
what
Ryan.
you said.
Can we get Ryan? He's probably on like every major news network.
I'll do you one better. I'll bring on JC Parets here from AllStarCharts.
Okay.
And I'm sure
JC will give us a good perspective on this.
I hope so. JC, good morning. How are we doing?
What's up, fellas?
What is
oil? That's about it.
What is your mood this morning, JC?
Hold on, one at a time. What?
Yeah. What is your mood this morning?
What is my mood this morning?
Yes.
Like what am I looking at? You mean?
Yeah. Just your. I mean, I was saying earlier, it's like I'm feeling really down about the state of global affairs. I'm trying not to let that color my long term view of the market. So I'm walking a tightrope here. I'm just curious where your head is at emotionally.
Yeah, I mean, listen, we've known each other for a long time. I don't know anything about global
No, for
politics or
sure.
geopolitics, or I know less about wars. So I mean, I don't really have anything to say on that stuff.
I
You
agree.
guys can bring on smarter guests. For me, it's a price thing. That's what we're looking at. Oil just hit 100 this morning. Rock and roll, baby. Gold's breaking out. I mean, there's opportunities everywhere.
So that's where you're looking, commodities.
Well, it's not anything new, right? We've been on this train for a year and a half already. So when crude oil traded below zero, that was really the catalyst that sparked the next commodity super cycle. So we believed at the time. Everything we've seen since then has really just confirmed that. We haven't seen any information, any data whatsoever that we're not in the early stages of a commodity super cycle. And what's great, the best part is that American investors are just not in energy. They own a ton of that crap growth and technology, which is fantastic, because that, I believe, is really one of the biggest catalysts for that unwind. American passive investors who bought into that passive investing scam, they don't own any natural resources. So I think we're just getting going. I think
Wait,
the pain is just getting started.
passive investing scam? Come on.
Yeah, because people are like, oh, I'm a passive investor because I own indexes. No, you're not a passive investor. You're an active investor. You're just letting the people at Dow Jones make the decisions for you in your activity, right?
I mean,
You're
you
not
got a
a
point
passive
here.
investor. You're just passing
I
that off
don't
to
want to
somebody
argue that point.
You've got one point here. I was pretty pissed off when Tesla got added to the S&P because I never liked Tesla at the valuation it was, and then they took around and boom, all of a sudden I own SPY, and all of a sudden I own 7% Tesla, and I was like,
There you go.
I don't want to own Tesla, but I had no choice because they stuck it in the index on me, and obviously it worked out for a little bit here now, but it's not working out so great in the last 3 weeks here. So I mean, let's take it back to the commodities, though. I mean, you've been bullish commodities for a while, which is a great call. How do you know, like, what time, at what point in time do you say, okay, this trade's worked, and when do you ring the register, like on your winners? And this is just a good overall, question for trading in general. When do you ring the register? Like, I'm always very good at entries. I always sell too early. When do you ring the register on, when you got it right?
Yeah, I mean, listen, it's all about time horizon. Like we've had trades, like we were in Oxy warrants, right? So that wasn't like a long-term trade. That was a short-term trade. Last month we put on Chevron Leaps, January 2024 Chevron Leaps. We got them for $12, the 150 strike. So we have longer-term trends, shorter-term trends. But when you really zoom out and identify what the trend is, I say this all the time. They say that you shouldn't kick someone when they're down. But the truth is, that's the best time to kick them, when they're already down. And American passive investors that are getting crushed in their irresponsible exposure to growth and their lack of natural resource exposure, they're feeling the pain. I think it's time to step on them. I think the pain is really just getting going. This can last a while. So we want to continue to be long energy, short technology, and specifically from a risk reward standpoint, which is what this is all about. You look at a ratio of XLE, which is the energy sector index stocks, versus XLK, which is the technology sector index, right? Tech stocks. When you look at the ratio, we are now back above those March 2000 lows. And if you recall what happened off those March 2000 lows, energy ripped relative to technology for years. And we're in the same scenario now.
So this is what you're talking about. You tweeted this yesterday, I think.
Yeah.
This is exactly what you're saying. The ratio between the energy sector and the technology sector.
Yeah. And what's great about it is that American investors just aren't in energy. If you look at the S&P 500, you have like 25% tech, you have 2% energy. If you own the NASDAQ 100, you have 0% energy. You have 0% basic materials. So the fact that American investors are just not they're not in the good stuff and they own too much of the bad stuff, like that's a serious unwind. That unwind takes a while. So I think there's still a ton of money to be made.
JC, you were also very bullish the financials here, and I just want to know, that was based on a rising interest rate environment. Looking at the financials here, how, along with being bullish, the commodities, you're also very bullish the financials here. Give us the bullish scenario here for the financials if this impedes interest rates going up.
Right. It's an interest rates trade is really what it is. And it particularly, just to be clear, it's financials relative to the market, and particularly regional banks that have that much more exposure to interest rates. But the energy trade is really the one that I think the unwind is just getting started, because American investors do own financials. Like the S&P is like 15%, the NASDAQ has 0, but
Yeah.
there is some exposure. It's the fact that American investors have no exposure to energy that's more attractive. For me, the financials relative story is almost like a bond short, right? It's kind of like the same trade.
Mm. Are these all banks, or are looking like
Regional
U.S.?
banks, community banks, like
Okay.
look at KRE relative to the rest of the market. Like that's sort of our approach. Most of the bank stocks are kind of like in messy ranges, but a lot of stocks are in downtrend. So if we look at financials that are in messy ranges, that seems to be a better place to look. So, for example, yesterday we sold premium in financials, trying to collect income because short term, longer term, they're in uptrends, right? Breaking out of 14-year bases. It's a great trade. But short term, it's a mess. So we're in favor of selling volatility at these levels. That's worked pretty consistently.
What defines a messy range?
I mean, pull up a chart of financials. I mean, we've gone, it's just been chop, 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 chop for
Yeah.
months. So what ends up happening is that those are traders getting chopped up, right? Traders trying to put on trend following strategies in a market environment that is lacking a trend. So traders complaining that they're getting chopped up. There's somebody on the other side of that trade, right? Collecting that income. And I wish that we did this more. We've done it a lot, but obviously in hindsight, anything that works, you didn't do it enough. Anything that didn't work, you did it too much, right?
And then going back to the commodities for a second, is that all commodities, or is it just energy? Are we talking about metals or softs or grains, or is
Yeah, listen, base metals, grains, softs, I
Yeah.
mean, they've all been ripping. Like, this is not anything new. It's not like we woke up this morning and all of a sudden commodities have been rallying. This has been going on for a year and a half or more. So this is the only one that didn't work this whole time was gold. Like, every commodity in the world went up. Like, Jira futures in India, absolutely ripping. Palm oil futures in Malaysia, ripping. So it's really a commodity story globally across the board, except for gold. And then a funny thing happened last week. We got new all-time highs in gold priced in Japanese yen. And, the argument is, well, JC, if you price anything in Japanese yen, it's going to look good. And while that might be true, we don't just, we just don't shy away from new all-time highs. We're now getting new all-time highs in gold, priced in some other currencies. And I think the US dollar is eventually coming. We're already back above the 2011 highs in gold. It's a great trade.
JC, what about with the rising commodity prices? Where's there is there a point where this is going to put a severe crimp on demand? And right now, limited supply, right? But there's a point where demand's just not going to be there. I mean, is that something that who can afford houses? Who can afford these different things? I mean, is there ever going to be a point where the consumer says whatever, and then that trade no longer works? Do you have anything in your forecast for that?
Yeah, no, I mean, at a certain point, you're right. I have no idea when that day comes, neither do you. Fortunately, nobody else does either. So we'll just let price dictate our actions as usual.
And then just to get a few tickers out of you, I mean, are you playing the futures here, or you like the commodity based ETFs, or like the trusts, like the GLD or the USO, or do you go to the equity side, go to some miners, go to some oil and gas stocks? How do you play that?
Yeah, I mean, listen, there's people that trade futures. I trade futures. It depends on how you're looking to get exposure. Some
Yeah.
people are in tax deferred vehicles, others are in taxable vehicles. So, like, it really just depends on what your particular mandate is for that particular account. There's no right or wrong way to do it. Me personally, I like the stocks. One of my favorites is a West Dome. WDOFF, West Dome, WDOFF. It's a Canadian $1.5 billion miner. If it's above 11, I like it long. We got a target of 20. And then you got some others that are not breaking out yet, but are setting up. Things like Agnico Eagle, things like Newmont, they're certainly setting up. And then just from a pure gold perspective, if you want to own the futures, you want to own the ETF, I don't care, go nuts. But we only want to be long gold specifically the commodity, if it's above the 2011 highs. If it's not, leave it alone. Like the last 18 months, you've been better off not owning gold if it's below those August 2020 highs. So if we're below that, again, that remains constant. But if we're above that, I like it long. I think 2,500 is next.
All right, JC Parets runs AllStarCharts. You can follow him there or on Twitter at AllStarCharts. JC, it's always a pleasure, man.
Always a pleasure, fellas. Look
Alrighty.
forward to getting up to Detroit, getting some adult beverages, maybe. Maybe.
Hey,
do it,
well,
JC.
I don't recommend coming until like April because we are due for one more late season snowstorm.
Yeah,
I don't
no
know if it's
shit,
March.
Spencer. Everybody knows not to go to Detroit in the middle of winter. Thanks, buddy. I appreciate the heads up.
Yeah, we
Fine,
give weather.
just
We
trying to
give
help
weather
the guy
on the
out.
show too.
Yeah,
Weather
sugarcoat.
updates
JC,
on the
JC doesn't sugarcoat anything.
Just trying to help
weather
the
and
guy out.
traffic.
Everybody knows the word's gotten out. The winter in Detroit's brutal. We know.
All right. Thanks for that. Have a good one, JC.
Later, guys.
Jesus. All right.
Winter's more brutal in Georgian Bay, I'll tell you that much. So I went from brutal winter of Detroit to more brutal winter of Georgian Bay. I'm a glutton for punishment in that way.
Yeah.
So
Yeah,
there's 3 feet of snow out there, and it's bitter
I love
cold.
JC. Okay, well, let's do this. We'll do a few more tickers on our radar, and then we'll go to the chat, see what's on your radar. I just wanted to mention, on the theme of not all stocks coming back. Like you look at the Skillz this morning, SKLZ, which is my number one loser on my movers tool, down 36%. It's down to $2 this morning. This thing was $46 a year ago. Well, it was like 55 weeks ago. It was like 13 months.
Yeah, none of this stuff's coming back, I don't think.
So, like, the question is this the all-time low? Who the heck knows?
No.
But is it gonna go back to 46? Probably not.
It'd have to go 2,000% to go back to 46. It's got to go 2,000%. It's so difficult to get back. There we are, and we can clearly, say that we went through and we are going through what they went through in 2000. The tech bubble burst in a lot of stocks is what has exactly occurred in a lot of these these overvalued growth names.
Yeah.
And we've been talking about these names. Obviously, Cathie Wood. We've been talking about those for a long time. These stocks are likely not coming back. In the case, and everybody wants to cite the Amazon from 2002, the stock that came back, but they won't cite the 95% of stocks. And I don't know if I don't have that number, but there was probably, a huge number of stocks that actually went to zero. And there is going to be a huge number of stocks here that are going to go to zero. So if you buy a stock at 40 or you buy it at 2 and it goes to zero, you lose the same amount of money. You'll lose all your money. So you have to be very careful just buying a stock at 2 because you think there's a possibility for it to go back to 40. Because stocks go from 40 to 2 often. I don't know this individual story and Skillz. I'm picking on them. But I'm just saying stocks go from 40 to 2 more often than not, continue to go lower than going back to 40. So I think there's going to be a lot of stocks that are going to go to zero.
For every Amazon in the .com bubble, there was
9 pets.com.
Well, I wasn't going to go 9, but yeah, there was
there was.
All right.
You could easily say there was probably 9.
And
didn't make it or went significantly lower.
There were also, call it 2, 3, or 4 Microsofts that did come back, but it took 15 years.
15 years. Or Intel and Cisco that never came back.
And it's still trying.
Everybody, what a great stock Cisco is. Well, if you bought this stock in 2000, 20 years ago at $80, you don't think it's a great stock at 54. So 20 years of investing has lost you 30% of your money. That's why you can't buy in bubbles.
Well,
you cannot do long-term investing in bubbles. You can buy in bubbles. You cannot do long-term investing in bubbles.
The caveat to that is the total return includes dividends, and that's helped a little.
Value. Growth at a reasonable price. Make sure they have the capabilities to grow into those valuations. If the stocks aren't making money, it's hard to value them.
I don't know what
don't make money.
I don't know what the total return of Cisco has been over the years. I'm sure it's better when you account for the dividends. So
I bet you it's not. Cisco dividend has never been.
What do we got going on here? Do we
we're rallying.
We're
chopping around. We're rallying a little.
I mean,
we're at 20 handles. We're still down 90. So we're just chopping around.
I tried to be positive, Dennis.
I appreciate that, Joel. I appreciate that.
I'm trying to be positive. I guess
I think JC made a lot of good points. I think there is the great unwind has been happening, and I've tried to call a bottom a couple of times in some of these Kathy stocks, and I should just stay on the bear train, I guess, because it continues to break down, and stocks making new lows, you got to go. If you're owning a stock that's making a new low on the move, you're on the wrong side of the trade. So when they start making new lows on the move, you got to go. If you got a spot, you can pick your point. JC's a momentum trader. He's going to be on the right side of the trade for the simple reason is that he's buying the strong and selling the weak. Kick them while they're down. I mean, that does work. And obviously, it's a momentum type market. That doesn't mean I'm initiating shorts here now on ARKK at $57. But, into rips, maybe you're selling to try to lighten up again. And, on the commodity trade, maybe you're buying dips to try to get exposure. But again, I'm just not a huge, I think we're energy is very much, taking the beneficiary of, potential war. There's a lot of uncertainty. Oil goes up in those periods as well. So it's a great time in the short run to own oil. I don't know in the long run. I don't know if anybody knows anything in the long run.
We'll do some tickers from the chat. Someone in the chat asked, when are they closing? Pedro asked, when are they closing the ARK fund? They're not. Okay, you do not close an ETF that has billions of dollars of assets. Okay, so just get that idea out of your head, because that is not.
And she's not going to blow out either. You got creation redemption here, so she's not going to. There's not all of a sudden like she just runs out of money, and that's it. That's the end, and she's got to sell everything. I mean, her investors are there. They want to redeem. She's got to sell stocks, and this is but it's not a matter of like getting blown out here and all of a sudden she's out of money and she's got to sell every single stock.
The largest ARK fund, ARKK, has almost $11 billion of assets in it.
A lot of money lost.
You do not close that. Yes, but you do not close that fund. So let's just.
She's going to stick with her, and it's her job, really. I mean, that's the mandate, to buy growth. So she can't just all of a sudden, okay, well, we're switching over to an energy fund and we're going to buy energy stocks.
That poses some interesting legal questions. Yeah, she can't.
We're not lawyers
unless she changes the mandate, in which case she can. So I don't know. I don't actually know the rules around that. That's an interesting question.
I
think it's just about diversification. And to JC's point, you own the S&P, you own 2% energy. I mean, that really sucks. And I own SPY in the long-term account because you know what? I'm a short-term trader. And I'd like to do some long-term investing, but the long-term investing for me is more passive. I'm trying to benefit from an overall uptake and trying to beat the market by adding some stocks in there. But overall, Joel, you too. I mean, are you indexed long-term? I have a lot of long-term indexing going on.
Yep. I tried.
And because I don't have to beat the market long-term, really. I'm beating the market short-term. It's my job and JC's job to beat the market in the short term and to take advantage of, to be a trader and to take advantage of those things. But I mean, and some people have to use their entire trading capital to trade with, their entire money to trade with. At a prop firm, I don't need to do that. So I have extra money because I'm using the Bright Trading Capital. So I have access to Bright Trading Capital. I don't need all my money in my trading account because people will say, well, if you're doing so well in your trading account, why don't you put more money in your trading account? Well, I'm not even using my own money. I'm using Bright Trading's money. So I don't need that capital. So I have capital to work with. What do I do with that? I invest that capital. But I'm not a full-time investor. I'm a full-time trader. So I can't actively manage my investment portfolio. I get a cool idea. Will I throw in a long-term portfolio? Sure. Will I buy on weakness in the long-term portfolio? Sure. Will I try to, take a Warren Buffett approach? That's how I approach it. And I try to approach growth at a reasonable price. But as a trader, I mean, you've got to be taking advantage of these individual moves. I mean, in my day trading account, I'm hedged right now. And thankfully so. If I was all long, I'd be getting killed right now. If you're all short, some days, you're doing really well, but other days you're not. But I try to overall manage the risk by having equal longs, equal shorts, and extracting alpha from individual little strategies. But,
I want to go back to, I want to go back just, to the longer term S&P chart here just for a second, Dennis, because we've talked about that March 220 low, right? And you've said, you just kind of, that was just like a false low. Right? I mean, we've talked about that. You said from a technical standpoint. So if we're going to look at it that way, right? And then let's just call this a false high, right? The 4,800. I think, and I'm going back, trying to give like a little bit longer term perspective in here. I mean, this until the who knows if the geopolitical situation's ever going to, what's going to happen with that. But we got to establish like if anything, as opposed to just crashing down. I mean, everyone's looking for a crash down, and we're going to 3,500 or back to 4,800, and new all time highs. 5-10 years. I think the investing environment for a while is, in the best case scenario, would be some kind of trading range.
I think
And
that's what we said at the beginning of the year. It's gonna be a
the,
lot of chop.
yep,
It's been a lot of chop. This year has been full of chop. It's been straight down for a week, but we've had a lot of chop. Do I think we're going to continue to go straight down here? I don't think they're going to make it that easy on the shorts. I think you're going to have some rip your face
right.
off rallies
We've
in
already
here
seen
too, and
that.
it's going to be and I think it continues even with all the negative headlines out of Ukraine. I mean, you got to think about the news flow. Okay, well, what's the next negative headline going to be? It could get a lot uglier. Could China go and invade Taiwan?
Well,
I mean, that's
now there's
possible too.
headlines about that this morning. So
That's possible. So there's a lot of potential negative headline flow, but in the absence of negative headlines, there's going to be a lot of chop, and there's going to be hope. And then, the silver lining is maybe we're not getting as many interest rate hikes as we once thought, and that was the biggest concern for the market 3 weeks ago. So there's going to be rip your face off rallies. Don't think, oh, I'm going to short here at 412 SPY and just rake it in. I mean, there could be a rip your face off rally. I think you got to be selling the rips and buying the dips continuously.
What did I say?
You can't be selling when we just dropped 20. You can't be initiating shorts when we literally just dropped 5% on S&P in 2 days.
What did I say a half hour ago? The Fed funds futures market was pricing an 86% chance of a quarter point rate hike in March. And it's down to 82% now.
Yeah.
So, can we short that? Can we short?
You can.
The Fed funds, right?
Fed funds futures. You can do what? Absolutely, you can do that.
Yeah. Wow.
And then someone in the chat asked a while ago now to explain why Bitcoin is down.
The risk asset. It has absolutely nothing, in it that makes us think it goes up when the market goes down and it's defensive. It is not digital gold. This is fool's gold in that way. Gold is going up right now in wartime because it should. Bitcoin is positively correlated in the last 2 years since everybody got on the board. It is now a risk asset and is positively correlated with the NASDAQ. I don't know when that breaks. And people say, look to the history. Well, it doesn't matter the history because nobody talked about Bitcoin 2 years ago. Nobody was in it except for the few people. It's become a risk asset because there's so many people holding it now that are similar attributes of the growth train, the Bitcoin train. It's all that. So it's grouped into risk asset now. NASDAQ goes down, Bitcoin goes down. The correlations are now correlated. Is it going to break apart eventually? Maybe, but I can tell you right now it's positively correlated with the NASDAQ.
Yeah, and I'll eat some crow on this one because I was on the train where not totally convinced that over the long term that Bitcoin is uncorrelated to the overall market, but you can't ignore it's a never ending story here. Every time risk sells off, Bitcoin goes with it. So
in the last year, and I know Shizzy's saying I don't know what I'm talking about. I'm saying on price. I don't know anything about the fundamentals of Bitcoin. I am telling you, and they say, why is this Dennis guy talking rubbish? People don't want to hear anything bad. They want to hear that Bitcoin is going up no matter what. Maybe it is, but I will tell you in the last year, can we bring up a chart? Can we bring up a chart to prove my point on Bitcoin
it's right there.
and the NASDAQ? Can we bring up a chart and put those two on the same chart? Spencer, you can do it.
I got it. I got you. Give me like 10 seconds.
I'm trying to make a point that is positively correlated. And that point in the last year is absolutely true. And 2 years ago, 3 years ago, maybe not. But because the hodlers have turned to a lot of retail, a lot of story driven, it's now become positively correlated. Is it going to break down and change in the future? It might. Maybe it's not long term positively correlated. I don't know. I don't know in the long term anything. But I know in the short term, right now, if the stocks are going down, if NASDAQ's going down, Bitcoin is highly likely to go down.
Right. So I'm going back here arbitrarily. What is this? This is since November 2020. Sure. Whatever.
You can't tell because there's so much volatility on that chart, but you can clearly see.
Well, no, here, but you can see the correlation. You can see it. Bitcoin,
up, and it's obviously its beta is way more, so you're going to see it way higher. But you can see it's hard because its beta is like 4 times the Qs. So when you're looking at it, but you can clearly see the overall trend. It's just 4 times more volatile. So you multiply it by that effect, but you can see, clearly going up for 2020, 2021, up, 2021 January, we topped out right around the same time. February or so, and then we've been straight down with the NASDAQ and then continuing to go down. Definitely correlated.
Yeah.
So it's not expected that Bitcoin is going to go up when the markets are going down. It's expected that actually Bitcoin is going to go down with it. It is now a risk asset. Will it decouple in the future? It might, but as of this time, it is positively correlated with the NASDAQ.
All right, I'm gonna let you guys take it from here. I'm gonna go cover some symbols.
And
over
again,
in
I'm not
PreMarket
making a
Plus.
call on whether Bitcoin is going up or down. People freaking hate it when you say anything negative about what they own. I'm not even saying anything negative. I'm saying it's positively correlated. I own a little bit of Bitcoin because I don't know long term what the hell is going to happen with it. I have a little piece. Did I make the piece smaller before at 50,000? Yes. Was I right to sell at 50,000? Absolutely. I can rebuy today at 33. So who knows? But people just take it so personally. And this is why this job, as talking, sometimes I just feel like I shouldn't even do it because, like the Peloton thing. When I had the tweet about Peloton and I said I'd be taking the profits into those Amazon rumors and nobody's coming to buy Peloton, the thing went from, I said it at 35, the stock went to 40, and everybody said how stupid I am. That, of course, it's going to get bought. There was 550 comments to me on Twitter. 550 people took the time out to comment to me to tell me how wrong I was because the stock went up for the next 2 days. It's $25 now. Nobody's come to buy them yet, but nobody's going to say to me, hey, you were right on that one. So everybody, 90% of people will point out when you're wrong, and 90% of people say nothing when you're right. It's a tough job. And everybody on CNBC, think about that with Jim Cramer when you're giving him heat all the time. And yeah, he's wrong a lot of times, and I give him heat too. It's a tough job because there is some good people out there that will acknowledge when you're right, but for the most part, people just like poking fun at you.
You should want someone to give you the opposite opinion. I love it when people disagree with me because it makes me consider the other point of view.
Makes you feel convicted in your opinion. Because the majority of people are usually wrong.
No, I want people to tell me why I'm wrong all the time.
Sure.
All the time.
It makes you think it through. Mitch was great yesterday. And you know what? And he had me thinking. And Mitch probably saved me some money yesterday because even at the end of the show, I'm like, you're right. I'm going and breaking all the rules here. And I got punished for breaking the rules.
Yeah.
And you know what? I'll admit, I was absolutely wrong. Trying to call a bottom, feeling that, hey, the futures are responding pretty well to this. And I absolutely was wrong on that stuff.
Yeah.
Mitch was absolutely right. It's a great
Real
call.
quick, just to add to that, Dennis, 100%. I don't even care that I was right that oil was going up. I care so much more that I was warning about trying to call tops and bottoms.
Yeah, you saw me going against something that I preach all the time, and we all get caught up. Mitch just ran away. But we all get caught up sometimes, and you want to be a hero, and you're like, I've been bearish Kathy Wood. And if you've been listening to this show, I've been bearish, this for a year, and saying it's going lower and lower. So I want to be a hero and try to call the bottom. I'm wrong. And you know what? I lost 2%. On ARKK, I bought it. I lost 2%. I moved on. And that's what you got to do. You got to cut those losers because as soon as it started breaking down, I was like, okay, it's not working. And you know what? You can be wrong. It's okay to be wrong. People, it is okay to be wrong. It is not okay to stay wrong. That is where people, really lose a lot of money trading, is that they will not admit that they are wrong and they will hold the stock to the grave because eventually it's going to come back. And eventually you are left with a portfolio of losers. It's inevitable. The only thing I can guarantee you in the trading world is that if you are unwilling to take a loss, you will eventually have a portfolio of losers because you're always selling your winners and selling your winners, and you're inevitably going to get stuck in a stock eventually that doesn't come back, but you refuse to sell it. Yeah. So it continues to leak and it doesn't come back. And then we see this again and again and again. In the prop trading world, you see people come in, they've never taken a loser before. If you have somebody that says, I've never had a losing trade before, I've heard this, you won't believe this, I've never had a losing trade before. Because you won't take the losers. And you know what? At the 2000 in February of 2021, and I looked at my portfolio and I had 100 stocks in there and 97 of them were higher. I'm like, this is not normal. It's not normal for everybody to just be making money like this. And that was the top. That was the top of all that stuff. And I have losers every day. Yeah. I have losers right now. I had losers yesterday. I'm going to have losers today. But you know what? I'm going to take those losers and I'm going to move on, because it's not about what you make, it's about what you lose that will define you, whether you can make it as a career as a trader. And then I'm done.
All right. And welcome to, this has been Dennis's TED Talk. Thank you for that, Dennis. I appreciate that.
Take the 5 minutes and make it a TED Talk. There you
go. This has been your TED Talk. All right. Let me bring on Peter Talk. Oh, I just lost Peter. Damn it. I had Peter here. All right. Let me see if we can get Peter back here in 1 second. He was coming to us live from the floor of the New York Stock Exchange. I really wanted to hear what he had to say. I just saw him there, and then I lost him. And now he's back. He's trying to get back. All right, Peter, I got you. I'm bringing you on. Give me some acknowledgement that you can hear me. Oh wait, he's not. Peter, you got me? I'm bringing you on, man. All right, we're doing it. Peter? Peter. Oh God. All right, that didn't work. Peter? Peter, do you hear me? All right, this ain't working. All right, we're going to have to call it a day, I think. He says he can't hear me. He can't hear me. Can you hear me now? I feel like I'm in a commercial. He's gone. All right. That's that. He's in his car, and then whatever. Let's just wrap it up, guys. That was a nice, fun way to end the show today. All right. As I always say at the end of every show, please remember that all the information on this show and all of our shows are meant to be used as informational purposes, not for investing or trading advice. I don't even know what to say. Everyone. There are days when there are more important things in the stock market, and this is one of those days. So we will keep doing our normal shows today. Live trading coming up next. Benzinga live after that. The roadmap after that. At the close after that. And I'll try to stay positive here and not forget the fact that the S&P 500, broadly speaking, not broadly speaking, it does come back, and I do believe this too shall pass. But it's hard to see that when you're right in the thick of the storm. So that being said, I'm gonna hop off. Live trading with Benzinga is coming up live right now. This stream will end or redirect to Ryan, Zunaid, and Mitch trading through the open. If you want to smash that like, I'd appreciate that. If you want to subscribe and become a member on Benzinga's YouTube account, you can do that by clicking the join button right there on our homepage. If you want a discount to Benzinga Pro, a 25% discount, click on the link in the description. It's also on the screen right there, but it's in the description of this video on YouTube, on Facebook, on Twitch, on Twitter, and even on LinkedIn now. Whoa, Peter's back now. Peter, can you hear me? Peter?
Can you hear me?
Hey, welcome.
What's up? Neither rain nor snow will keep me from Benzinga, guys.
All right. Well, we got like a minute left here, Peter. So just give us your quick thoughts on the market's reaction here to the developments overnight. All right, and that's an omen. I think that's about as good a way to end this show, I think, as we can. I'm calling it. I'm calling it, Peter. I'm calling it. Everyone, live trading with Benzinga coming up live right now. We'll catch Peter again next week. Have a good one, I guess. Stay green and stay safe, everyone.